You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. The Futures Rundown is brought to you by T4 Futures and Options. Elevate your trading experience with the T4 Futures and Options trading platform. Whether you prefer desktop or mobile applications, T4 delivers low latency and professional grade functionality for both traders and brokers. Take advantage of theoretical sheets, strategy solver, MBO, advanced charts, and a suite of powerful features to enhance your trading strategy. Visit ctsfutures.com or search for T4 Futures and Options on Google to register and get a free month. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody. That music means we are back. It is Wednesday. It is time to dive back on into the world of futures. Yes, it is time for the Futures Rundown. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are binging. Just a reminder, if you're not joining us on the Pro, man, you missed out on a one-of-a-kind event yesterday. Of course, I'm talking about the Volatility Death Match, involving someone that our guest today is very familiar with. Good old Dr. Vix himself, Mr. Russell Rhodes, picking yet another fight. He picked a fight with our guest today. Then he decided he wanted to do it again. So he picked a Volatility Death Match, no holds barred, with our buddy, Mr. Vixologist. Blood was shed, tears were shed. A wild time was had. At the end of the day, our pro members determined the victor. 2 men entered, only 1 could leave, listeners. It was a fascinating time. If you missed it, you owe it to yourselves to check it out. Volatility Deathmatch. There can be only one. And speaking of death matches and debates, our guest today is familiar with that. She may have kicked that off against Dr. Vix on our pro. Last year, was it? The wild time. Who am I talking about? Of course, our good friend, Miss Carley Garner from DeCarley Trading. Carley, welcome back to the network. I'm glad to see now, a year or so later, you have fully recovered from your battle royale with Mr. Dr. Vix.
Indeed, I have. And I missed yesterday's. I'm going to have to go back and check that out.
It was a wild time. You know, Russell picked the fight. He talked himself into this one. He really wanted to do it. So,
that seems to be his MO.
That does seem to be his MO. He likes to pick fights, listeners. That's also maybe a bad side when you step into the trading pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, listeners, welcome to the trading pit. A lot of fights happened when you stepped into the trading pit. Or more often, they would take you outside to the horse at the CBO. I don't know where the spot was at the CME and the Board of Trade. And that's where the fights would occur because you get fined, of course, if you fought on the floor itself. But sometimes it couldn't be helped, listeners. Yes, the trading pit's a wild place and indeed a wild segment on the show. And Carly, we have a lot of things lighting up our tapes this week to the red and to the green. But before we get to that, what's lighting up your own personal tape in the world of futures this week?
Well, there's a similarity between floor traders and hockey players. I'll just leave it at that.
They're all missing teeth. What else can we say? You know,
exactly. Aggressive type of folk, very nice and polite off the court or ice or whatever you want to say, out of the ring, but aggressive inside. So we've got a few things on our radar. There are a handful of extremely overcrowded trades: lean hogs, live cattle, and wheat. So those are the three markets we're focusing on. I noticed none of those made your hot or cold markets, but those are worth taking a look at.
He brought up a good saying. I'm going to have to add that to Dan and I were just debating, forgotten terms and discussing them on our Options Bootcamp show. And that term off the floor was a very common one. You'd always say that, right? He's a great guy off the floor. He has 15 orphans that he adopted and he supports 500 charities off the floor. Down here, He will shove a pencil in your eye to get a one lot. But off the floor, he's the best guy you ever met.
100% dual personalities.
Yes, so there is something to that. Maybe we need to explore that on OBC, listeners. What do you think? Good guy off the floor? Kind of a term and a description lost to the sands of time. All right, what's lighting up our tape here this week? Listen, let's go a little red. Let's just mix things up for some fun. What are our top 5 downside red movers this week, listeners? Let's kick things off once again. It's been kind of spicy out there of late. We're talking about Class 3 milk, dairy. Having a wild time, a wild year. Class 3 milk coming in at number 5 on our list this week, listeners, off 3 1/3%. So if you're lamenting your coffee getting too pricey, maybe some of the milk you put in it, I don't. I go for the dairy-free, of course. But if you go for the regular old lactose type, then maybe you're happy. You're saving a little bit on your addition to your coffee. And then also keeping it on the coffee theme, number 4, listeners, it's also getting cheaper to sweeten that coffee. Why is that? Because sugar number 16 is number 4 off 3.87%. And then you want to have a nice balanced breakfast. Maybe you have a bowl of oatmeal. Well, that's getting cheaper. Oats coming in at number 3 off 3.93%. And then number 2 has nothing to do with the breakfast. Yes, of course, it's our old pal VIX coming in this week off 4.87%. VIX is going to gum up these works a lot. I've said that many times, listeners, but it is an actively traded futures contract, so we have to include it here on the list, even if I know all you diehard vol traders just bristle at the notion of using percent of percent when it comes to vol. But hey, I've had to get past it. You will as well. And then our number 1 downside mover this week, listeners, nat gas retreating as it's supposed to do in the summer months, off 5.25%. Carly, are you excited about some of your coffee add-ons getting a little bit cheaper this week? And anything catching your eye on our downside movers this week?
Yeah, I'd love to see natural gas come off a little bit. I think despite the seasonality, which obviously we're in the midst of the summer, I think that's going to be a buy the dips rally. So I'd like to see the dip get a little bigger. So hopefully it's on the downside list next week and we'll get a little more long. We're currently long with call spreads. But I wouldn't mind selling a put if we get a little cheaper there in nat gas. And sugar seasonality is bullish this time of year, so that's one to keep an eye on. I mean, it's looked completely awful the last week or so, but sugar's the type of market that turns on a dime and it doesn't really look back. And so I know this is a future show. Probably wouldn't go long futures unless you're playing with tight stops, but I think it's worth having some call options out there because this thing can rebound pretty quickly.
If you want to talk some options setups, we won't hold it against you, Carly. It is the Options Insider Radio Net. We can't ignore our roots at the end of the day. So yeah, maybe some calls, some limited risk upside. Maybe not the worst thing in case sugar decides to sweeten up in the next week out there. All right, let's keep rolling. We have any breakfast foods on our upside movers this week, listeners, lighting it up to the green. Not unless you like to drink some crude oil. Coming in at number 5, listeners, we got our old pal Brent up 5.4%. And then coming at number 4, right above it, it's the other side of the crude oil spectrum. It's WTI up 6.06%. So 5 and 4 right in to the energy with crude oil. Number 3, listeners, we're going out to the metals realm. It's a precious metal. It begins with P. Maybe not the one you're thinking of, though. Yeah, it's palladium, up 8.45%. It's a good week to be a precious metal that starts with P. Hint, hint. As we come into the number 2 spot, listeners, a 2 kind of combo spot, really, because it's Ether, Micro, and the big futures technically taking the number 2 and 3 spot, but we'll merge them together there at number 2, listeners. They're up 9.11%. Man, that's music to the ears of Ether bulls out there. It's been a rough year. The last month has been amazing for ETH bulls. If you just bought ETH a month ago, you're like, what's everybody complaining about? Up 50%, close to it. It's been quite the run. But outside of that, it's been a little bit more challenging. Continuing some of that upside this week, up 9.11%. And our number 1 upside mover lighting up the green on our screen this week, listeners, it's the other precious metal that starts with P. Yup, it's platinum, up 15.3% this week. So, Carley, a wild week for precious metals that start with P. What's catching your eye, madam?
It is. So the number 1 on the list, platinum, I think that's probably more of a short squeeze than anything. That market had been trading in a defined trading range for a couple of years, and it broke out, and I think it surprised everyone. So it'll be interesting to see what that does from here. I personally don't trade platinum or palladium for many reasons, but mostly because there's not any real viable option markets to hedge or things like that. What I am surprised is that we don't see the livestock markets. I already mentioned them before, cattle and hogs on this list, because they've had a massive run in the last week. Maybe it just feels that way because we're net short. We went short hogs today. We've been short cattle for a little while, taking a little bit of pain there. So maybe that's why maybe it just feels worse than it is. But I would have expected to see those on the list.
It always feels worse when you're short, though. I'm looking here. Let's see. We've got pork cutout up 2.91% this week. And we've got live cattle up 2.67%. So
that's
up,
it.
but not enough to make it into, and then feeder cattle up 2.37%.
Yeah.
So it's getting there. It's not quite
maybe last week. Yeah, maybe last week is where all the pain was. Anyway, we've got those on our radar.
If I extend it to a full month, Carley, now we're talking a little bit more action. Lean hogs up 11.2%. So you'll certainly feel that one. Pork cutout up 8.35%. And I'm looking for our old pal live cattle. Live cattle up 4.03% on the last month. So obviously a little bit more pain going back a little bit farther, Carley.
Indeed.
So we feel your pain collectively here.
Thank you.
On the show, Carley. All right, let's see what the futures markets are feeling today. What's lighting it up? Is it an explosive day out there? Is it a quiet, sleepy day? I mean, we are heading into the start of summer. Are folks drifting off to the Hamptons? Are they heading out to the south of France? Are they saying the hell with these futures things? Let's find out. You know, I would quantify today as respectable, not earth-shattering. You know, the top of our list is not north of 2 million contracts. Remember, our last show only cost you exactly 300,000 contracts to break into the top 10. A little bit more than that this week, so we're 336 to break into the top 10. You might expect crude oil to be on our list today, given how much it's moving this week, but crude oil actually coming in at number 11, 314. It would have broke into the top 10 last week. Not this week. Number 10, listeners, is our old pal, 3-month SOFR. And we're pretty evenly split this week in our top 10 between June expirations and September. It seems like a lot of the rates are concentrated on the longer term side of the expiration calendar, which is interesting, kind of an interesting development of that space. A lot of you have written in about that in the past. Maybe we'll get to that in a minute, but let's kick things off. Number 10 here, listeners, 3-month SOFR. Again, the June contract, 336,000 contracts on the tape for the number 10 spot. Number 9, listeners, it's the NASDAQ 100 E-mini, also June, 434,000 contracts on the tape. Number 8, right back to the rates. I hope you like rates and equities today. We got a lot of that today. Listen, number 8 is the Ultra 10-year out to September, 448,000 contracts on the tape. Number 7, one of the lone non-equity or rates offenders on our list today, listeners. It's FX, the euro, coming in at the June contract for the euro, 510,000 contracts on the tape. Listeners, obviously a lot going on the trade war front with Europe right now, so that's going to drive some action out there in the euro. Coming in at number 7, try to remember the last time we saw the euro this high on our list, so that's kind of interesting. Number 6, back to the usual suspects of the rates. It's the 2-year note, September once again, 607,000 contracts on the tape. Number 5, right above it, we're going out to the 5-year, also September, and we're already over 1 million contracts now, 1.02 million contracts. So the top half of our top 10, the top 5 really, that's pretty active, even though we're not topping 2 million contracts yet, but breaking into 1 million contracts right around the number 5 level is a decently active day, all things considered. Number 4, out to the equity micro land, in particular the S&P, June expiration here, 1.17 million contracts. Right above it, we have the quote-unquote big dog, even though the real big S&P contract has gone the way of the dodo. But the S&P 500 E-mini, also June, 1.2 million contracts. Right above it, we have the NASDAQ micro, also June, 1.3 million contracts. And the big dog, yet again, the 10-year, 1.57 million contracts. Carley, what are your thoughts about effectively a rates versus equity battle in our top 10 with the exception of the euro sneaking in there? And I know some of our listeners have written in the past about these nuances of the trading of the rates versus other products, where today, once again, we have pretty much everything in the rates column with the exception of 3-month SOFR going a little bit farther out, going out to September. What are your thoughts on that, Carley?
Rates are a really awesome complex for traders, especially newer traders, because for starters, the margin tends to be low and they're very, very liquid. Obviously, that's why they make the active lists every day. And lastly, there's relatively reasonably priced options usually if you're the type of person that trades futures and hedges with options. It's a really great arena to be in. And lastly, I'll just say this. I think the treasury market's going to surprise some people here in the next, let's say, handful of weeks. The seasonal bottom is generally right about now, late this week or early next week. The whole world is short. Everybody's portfolios lightly allocated to treasuries because they've been kind of conditioned. Treasuries bad, high risk. The U.S. government doesn't have their stuff together, and all of those things might be true. But the reality is, we're probably the least dirty shirt in the hamper, and at some point the money's going to have to go somewhere. And if you want to put it in Europe, you're going to earn half the interest and take on almost as much, or arguably maybe only slightly less risk. So I think it's extremely undervalued here in the Treasury complex, and I think we probably get some inflow coming back in. That would also be supportive for the U.S. dollar. So I know nobody's looking for a dollar bottom, but I think that might be exactly what we get. So we might get some contrarian moves here in the next couple of weeks. We'll have to see how it plays out.
I like that. The least dirty shirt in the hamper. Yeah. Kind of damning it with faint praise a little bit there, but I like it. Exactly. And also maybe a good title for our episode. I'm just throwing that out there to the producers. I like that. I'm trying to think. I'll have to go look back in the archives of the show, Carley. It's been a little while since we've had the euro break into our top 10. Obviously, there's some interesting context around that and why it's trading today. Do you folks do a lot of FX over there at DeCarley? And what are your thoughts on the euro lighting it up a little bit today?
We do some FX. It's unfortunate that the dollar index itself is traded on a different exchange, is traded on the ICE exchange, which limited hours, limited option availability. The euro is a really nice go-to because if you're looking to express an opinion on the dollar index, the dollar index is 60% euro, roughly. I'm kind of rounding, but so what a lot of people do is they'll either go long or short the euro to play the dollar. In other words, if they're bullish the dollar, they'll sell the euro and vice versa. What we're doing is we're just buying cheap euro puts because we don't want to be caught in the ring cycle if we're in the ring cycle if things go the other way. But we'd like to have a foot in the door because, like I said, I do think that currency market's about to surprise some people, and maybe that's why you see some volume here. Maybe other people are positioning the same.
Speaking of volume and position, let's get out to see what the trends are looking like for our year-to-date movers. We are pretty much getting into the halfway point of the year. It seems like the year is just kicking off, but we're already getting to the halfway point. And we've said many assets have lived entire years worth of action, multiple years in just the past 6 months or so. Some starting out one way and then looking like they're maybe heading another, hint, hint. So some interesting stuff. We'll kick things off in the red to the downside yet again. Let's just keep things consistent on the show. Coming in at our number 5 spot, lighting it up to the downside for the year, listeners, it's soybean meal off pretty much 10%, 10.07% for the year. And then holding down the combo spot, the micro and the big futures getting squished together for number 4. What am I talking about? It's Ether falling all the way down to number 4, now down only, I put only in air quotes, 18.16% each. That may sound like a terrible year, and if you're long it is, but remember, it was pretty much at the top or right at number 2 for most of the year in terms of our largest percentage movers. It was down close to 50% for the year at one point. So at this point, it's gotten back a good chunk of those losses, which for the ETH holders is welcome news. They were hoping this year was going to be the year of outperformance, the year where ETH kicks it into high gear after last year kind of underperforming Bitcoin and Solana and some of the other major crypto assets. And then instead of doing that, it just fell into a dumpster fire and lost nearly half of its value. So it's good to see it's clawing its way back. It's got a long way to go, but for ETH bulls, they'll take that. At least it's not at the top of our downside loser list for the year anymore. Coming at number 3, going back to dairy, a wild year in dairy. It's dry way off 20.09% for the year. Number 2, it's one of the EMs. Which one is it, listeners? It's lithium, off 28.2% for the year. And the number 1 downside mover, this has had the spot for a while. ETH was happy to surrender it to our old pal OJ, off 39.27%. Keeping with our theme of a cheaper breakfast, listeners, your coffee might be more expensive, but the milk that goes into it and the oats that you eat next to it and the OJ that you drink alongside it, all looking a little bit cheaper right now. Carley, anything catching your eye on this list? And are you surprised that ETH is starting to claw its way back to maybe, dare I say it, almost unched one day, Carley?
Well, I mean, even the worst performers have their day, right? I'm not judging Ether. I don't trade it. So all I can say
we're
is
here to judge, Carley. Judge away.
All I can say is what often happens is, especially we're talking year-to-date movers, like over a stretch period, so 6 months to a year, usually the commodities or the markets that are on the red list, the next year or the next period are going to be on the green list. So always keep in mind everything is temporary. So hedge accordingly and go along for the ride, but make sure you survive, because chances are, I'm not telling you to buy orange juice, but I'm just telling you, when you see a number like that, orange juice down 40%, the odds are at some point next year, we're going to be looking at the same type of chart. And we're going to see OJ somewhere on the top 5 on the green. So, markets go through cycles, and patience is very critical.
Carley is saying it right now. Load up on OJ. Put the college fund, the home loan on OJ, and let the dice fly. Right, Carley?
Sure. Why not?
If I can read between the lines of what you're saying there, I'm just putting a few words in your mouth. You may or may not agree with those words that I'm sticking in there. Let's keep rolling. Let's go out to the upside movers. What's lighting up our screens green for the year so far? And I look at this, we actually had to rerun it a few times to make sure we weren't just running a list of metals for the year, because that's pretty much what we've got now, listeners. If you were long pretty much almost any metal, I mean, there's a few exceptions, but you can go base and certainly a lot of precious. You're having a pretty good first half of the year. And we're kicking it off in the base metals. Copper up 17.67%. Obviously, early on, there were some concerns. Global trade war, what's that going to mean for the economy, and therefore the demand for copper out there, inextricably linked to both our economy and indeed the Chinese economy, but still up now, nearly 18% for the year, 17.67%. And the number 5 upside mover for the year. Number 4, keeping it in the precious metals realm, pretty much for the rest of our list, listeners. It's palladium, nearly 18%, 17.98% upside for the year. Number 3, it's the whipping boy of the precious metals. The number 2, a lot of you have written in, a lot of you have asked us in the live chat, what is up with this metal? It's silver, up 21.5%. All I can say, I guess, is better late than never. It was not participating at all with the gold rally. In fact, it was selling off, which really drew a lot of your ire and frustration. Even some of our guests, like Uncle Mike, lamenting what was going on in silver. Well, they're making up for lost time now, up 21.5% year to date. Number 2, you might expect this to be number 1, listeners, and it was hanging out there for a while, but now down to number 2, it's gold, up 23.34%, obviously off its highs for the year, so that's also accounting for some of that move downside on our list. But still, you can't be mad with nearly a 25% year-to-date move in gold. What is kicking gold to the number 2 spot, listeners? Well, we talked about it earlier in the show. If you were paying attention, it is platinum, up 36.42%. Sounding a little squeezy to me. Is that what you're thinking as well, Carley?
That's my take on it, yes.
And just in general, I know you've been on here and on Twifo this year, not exactly expressing optimism for the metals going forward. Are you surprised to see so many of them dominating our top 5 for the year?
Obviously the metals are doing well. I mean, you can't argue with the numbers, right? I question whether we hold this. So we'll have to see what things look like in 6 months. Markets do mysterious things, but what I can say is if I'm right about the dollar, and it's a big if, maybe I'm wrong, but if the dollar holds here and starts to progress to the upside, that's going to put a thwart in all of these metal rallies pretty quickly. So jury's still out.
But the jury's never out on your questions, listeners. Let's get to it now. A little bit of the old futures free-for-all.
Ring the bell. It's time to take on all comers in an epic Q&A battle royale. All questions can enter, but none can leave without an answer. It's time for the Futures Free-for-All.
All right, everybody, welcome to the Futures Free-for-All, the portion of the show where you folks take the reins with your questions, your comments, your insights. Hit us up at Options on most major social media platforms. Questions at theoptionsinsider.com. Also works, of course, if you're listening live. You folks can chime in with your questions. I see folks talking about OJ and Shiba, the potential for Shiba futures. And we talked about this before. I wouldn't hold my breath on that one. I don't see a huge rush to list a future on a underlying that is a fraction of a cent. I mean, anything can happen, obviously. And we just got Solana futures, so there's clearly an impetus over there at CME to list more crypto assets, but I think they're going to go for the big dogs and the underlyings that perhaps have a little bit more meat on the bone. But you know what? Never say never in these markets. We all said not never, but it was highly unlikely that crude was going to go negative, and look what happened. So anything can happen out there, and I will certainly be surprised, though, if we do see our friends over there at CME listing a Shiba future anytime soon. All right, to the questions here. Let's go to Jerry first up. Jerry has an interesting question. He says, is it viable to only be an equity futures trader? I play around with micro NASDAQ and a little micro E-mini. That's pretty much it. Is that viable over the long term, or am I missing out on the riches and wonders? The riches and wonders of the futures market by limiting myself? Well, that's an interesting question, Carley. Do you think he is limiting himself, or as he puts it, I like this, is he missing out on the riches and wonders of the futures market by not slinging a little, I don't know, OJ, Carley?
Right. Well, what I'd have to say is the answer is probably in your account balance, right? Are you making money? If you're making money, maybe just stick to what works. If you're not, maybe it's worth venturing out. I've probably said this on the show again, but I'll say it again. Trading is 99.9% a mental game. It's not market you choose. It's not the strategy you choose, although, that's part of it, but it's only a small part of it. The reality is it has to be a strategy in a market you're comfortable with, you feel like you have an edge with, you feel like you know like the back of your hand, and if so, go for it. Because if you're stretching, let's say for example, this person that generally only trades stock indices decides to step outside of his comfort zone to trade OJ or something that just is a completely different animal, and the market goes limit up or limit down, there's going to be some panic involved. There's going to be some really poor decision making. There's going to be some big losses. So some people perform better if they're have a little bit going on in other markets because there's a diversification factor, and other people perform better if they're just focusing on one simple market. So it depends on the person. My personality is I like to have lots of little things going on all over the place, and so that way if I'm wrong on one, hopefully something else is picking up the slack, and that's works better for my mindset, but everybody's different.
Speaking of OJ, we have a question in our live chat, Carley, from who was that? From Frank. He says, "Are there options on OJ?" And the answer is yes. The reason you don't hear about them a lot on the network is because they don't trade at CME; they trade at ICE. And I was just looking over the chain here while Carley was talking. And another reason we don't talk about them is that they're not the most liquid. I'm looking at the July chain here as we're talking, and you have OI and some of the strikes that gets into 100 plus contracts. I see 223 here on the put side for obvious reasons, but it's not the most liquid of products, pun intended, over there, Mr. Frank. Carley, do you sling any OJ over there at DeCarley? And what are your thoughts on the products they can trade with it?
We very, very rarely touch OJ for that exact reason. Now, the option liquidity is actually even worse than what you think it is by looking at the open interest and the volume, because a lot of that open interest, for example, you mentioned there's 100 and something open in one particular strike. That's probably one trader doing 100 lot as a hedge or something.
Yeah, it's one customer and he's the market.
Exactly. And so the bid-ask spread at any given time during the day, if you look at it, pull up an option chain in orange juice, it's either blank, there's no bids or asks, or if there are bids or asks, they're so insanely wide that you honestly just shut it down and go look at something else. And even the futures contract itself is very illiquid. The bid-ask spread on the futures contract, not the option, but the actual futures contract can be, I've seen it in more volatile situations, like what we saw over the last, let's say December, January, when it was in free fall. There were times I looked and the bid-ask spread on the futures was 8 to 10 points. So it's just almost untradeable. To be honest, in the past, what we've done is if we really think there's a extraordinary opportunity, we might buy a put or buy a call with limited risk and just play it as some sort of a flyer. But it's just not, it's for retail traders, it's just not a market to go big in my opinion. And as you mentioned, it trades on the ICE exchange. A couple drawbacks on that: the market hours are abbreviated. They're kind of odd market hours, to be honest. And it's hard to get I take it back. It's not hard to get live data. It's expensive to get live data. Anybody that wants live data on orange juice or anything that trades on the softs has to pay $140 plus New York sales tax a month per device. So it's very expensive. So most retail traders just go to CME products, leave the ICE products out. And so that's why you see the liquidity issues.
Yeah, you have Queen in our chat saying she checked it out once and it was terrible. So backing you up there, Carley. Yeah, it's a trade by appointment type product. Yes. To quote our buddy Mr. Overby here on the network, Frank, if you have the urge to trade OJ options, just lie down until the urge goes away. You don't want to mess with those, Frank. At least until they start putting up a little bit more. You don't want to be the market. That's never a good thing. All right, let's keep rolling. Let's got another question here. We go from Jerry to 33EE Egypt X. So 33E Egypt X. That's a mouthful of a handle, sir or madam out there. Wow. All right. They want to know, that's a fun one. What's one lesson you learned the hard way? Wow. That could be a painful lesson, Carley. How about trading OJ options? That sounds like a painful lesson. Don't do it. But outside of that, Carley, they want to know, what's one lesson you learned the hard way in the futures world?
Well, to be fair, I've learned many, many hard lessons, so it's hard to pick just one. But I will say that in general, and it's a lesson I'm sad to say I've learned multiple times, you should always be asking yourself as you're analyzing a market and putting a strategy together, how much can I lose, not how much can I make? Because the reality is there's a pretty good chance you're going to lose money on it, and you want to be prepared and have a risk management strategy in place. and lastly, less is more. So never feel like if you're on the sidelines, you're wasting your capital and your money should be put to work. Otherwise, it's some sort of, you're missing out on profits. Don't think about it that way. Think about it as if you're on the sidelines, you can't lose money. I mean, maybe inflation, you're losing a little bit of buying power, but that's minuscule compared to what you can lose in the market. So be patient. Patience is really the number one lesson that I've learned, and it's really hard to do as a human. We feel like we need to be doing something, but the reality is most of the time we probably should be doing nothing at all, just waiting for the right setup to occur.
Excellent advice, madam. Hard won, hard earned, as always. Nothing wrong with trading what you like and what you're comfortable. Getting back to that question from Jerry, too. I didn't get a chance to address that. Yeah, there's nothing wrong. If you want to just play around with NQ intraday, there's nothing wrong with that. I don't see why you feel like you have to go trade FCOJ or lumber or anything else, really, if you're not comfortable with it. If you know it and you like it and it's working for you, stick with it. A lot of people just sling the equity futures out there and call it a day. So you are far from alone in that, Jerry. Great questions, dubious handles this week, but we'll see what we can do. That's going to do it for us on the old futures rundown. It's also going to do it for us on the network today. Remember, if you missed it, go check it out on the Pro, theoptionsinsider.com/pro. A one-of-a-kind event, the volatility death match. 2 men enter, only one could leave. Who emerged victorious and, dare I say it, alive? Got to tune in to find out. Check it out over there on the Pro. A great time. Also other great content there as well, but that was a really fun one you want to check out. And Carley, if they want to check out what you have cooking, where should they go? What should they do?
Well, you can find me at DeCarleyTrading.com. It's DeCarley trading.com. I'm also on social media. Just search for DeCarley Trading or Carley Garner on X. The handle is at Carley Garner.
There you go. Check them out. DeCarleyTrading.com. Back again with our usual Thursday doubleheader tomorrow of This Week in Futures Options. Very much the sister program to this one. You should be listening to that if you're listening to this. As well as the Option Block Friday back on Vol Views. Did Dr. Vix, did he survive to make it to Vol Views? I guess we'll find out. As well as, of course, Options Oddities. Another fun gift for all of our Pro members out there. And we're back again next week, all the way to next Thursday, another episode of the Futures Rundown. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.